You as an investor might look for many or new ways to reduce risk in your investment portfolio. So, is it advisable for you to transfer your funds from mutual fund to PPF in order to reduce risk? To answer this, we have our industry expert Mr. Satish Prabhu with us. Satish, over to you.
It is also depends on your risk appetite and the reason why you want to move from mutual funds to PPF. Remember that PPF have got a very long lock-in period of 15 years. So, and if you're investing in an equity fund and shifting that money to PPF for a very long lock-in period, it may not be such a good thing to do. So if you're basically trying to de-risk yourself, basically you're moving from a higher risk class to a lower risk class. If you're trying to de-risk yourself, it is good to move to an asset class which doesn't have a lock-in and do it over a shorter period of time. Like if you're say nearing a goal after 15 years, you invested in equity markets for 15 years and now your goal will happen say in the next 3-4 years. So in that period, you try to move your money slowly from equity to debt. And PPF may not be that option because like I said, PPF has got a 15-year lock-in period. You can independently invest in PPF. That's not an issue because people look at it from tax-free returns, etc. But overall, if you look at between equity and PPF, equity has the potential to provide you higher returns over a 15-year period, which is the same period as PPF. So if you want long-term investments, equity as an asset class would be better. And if you want short-term investment horizons, then debt as an asset class would be better.
Thanks for your detailed answer. If you have any doubt regarding this or any other financial or investment decision, don't hesitate to book an appointment with our financial expert. The link to the appointment is given in the description below. And also, would you like to know more about finance and investment? Then we would recommend you to attend our live webinar. The link to the webinar is also given in the description below. The webinar is absolutely free. If you like this video, hit like, and if you are new to our channel, please do subscribe.